My name is Craig Grant. This is my Bitcoin wallet. 40 Bitcoin that I earned. I didn't buy. I earned this Bitcoin with a service called BitConnect.
Let's go! Today I'm going to be talking about one of the largest cryptocurrency scams ever, BitConnect. As you could probably tell from the short ad that just played, BitConnect was too good to be true, but that did not stop the people running it from raising $2 billion in funds for the Ponzi scheme. So I'm sure that many of you are familiar with this topic already, and some of you got recently into crypto and you don't know what this is. But some people watching this video were even affected by BitConnect itself. But even if you have never even heard of it before, this is an important video to watch because the SEC has finally filed a lawsuit against 5 of the most prominent promoters of BitConnect, and it could have huge implications for the future of crypto regulation. So in this video, I will be sharing the details of the lawsuit and then explaining why it is important and how it could lead to some huge changes in the crypto space. So for those of you who were not involved in crypto back when BitConnect was a thing, I will give you a quick explanation of what it was and how it was supposed to work. So BitConnect was launched in late 2016 and became one of the most successful ICOs during 2017. It was a platform with its own coin, BCC, that was supposed to allow users to earn guaranteed passive interest on their assets at a very high rate with no risk thanks to their proprietary trading bot and volatility software. So right here is a little chart showing some of the rates that could be earned. As you can see, larger deposits were encouraged by offering higher rates. So all levels offered 40% per month, and then some levels had an extra amount paid out daily. But behind the scenes, the project was just using the funds of newer users to pay out the interest for older users. So that was the definition of a Ponzi scheme. And so while this may seem obvious in hindsight, because there were actually people getting paid out interest and being able to withdraw some money, it seemed like it could actually be real, and back then even more than now, people believed that crypto could make pretty much anything possible, especially the people newer to it. And also, just to be clear, some of the biggest YouTubers, I would say the biggest YouTubers back then, were actually involved in this Ponzi. So if the biggest YouTubers in crypto were promoting this, I mean, it gave this project some legitimacy because they were the biggest YouTubers and they were saying that this was real. But as you will find out later on in this video, what comes around goes around. But you have to pay attention to that. Like those times, they were completely different. Crypto was pretty new. It wasn't mainstream and people didn't really understand it. And you had the biggest YouTubers promoting this. Although, of course, there were a lot of red flags, a lot of people raising concerns about this and telling people to stay away. Still, retail investors, just look at all of the IDOs and everything that's going on right now. All of the people aping into rug pulls, it's the exact same thing, although this was a bit more obvious. And then there was also, of course, the effect of FOMO, because the crypto space was going up. And if you had a friend who was making more than 1% a day just by letting money sit on a platform while you were either working every day or trying to trade consistently, you definitely would have felt some FOMO. Additionally, the BitConnect team worked very hard on their marketing campaigns and hosted big events, as well as used multi-level marketing to get new people involved, meaning that it was a pyramid scheme as well as a Ponzi scheme. And so a lot of the time, the people advertising this would do so by showing their BitConnect accounts with huge balances and saying that anyone could achieve the same results as you saw at the beginning of this video. By the height of the project, the BCC token reached a value of $2.6 billion and became one of the top 20 cryptos by market cap. I will even try to remember this, and I believe this one's pushed into the top 10 cryptos by market cap. I don't have any facts about that, but I believe at some point it actually did. But eventually, after a series of actions by regulators in the UK and the US, the platform shut down in early 2018, and as soon as that was announced, the BCC token crashed more than 90%, causing huge losses. Again, I believe that this was actually one of the most defined moments of the 2017 bull run, because when it crashed in early 2018, it went straight to zero. I mean, it wasn't like a top 15 crypto going down to the 20th place. I mean, it became completely worthless and a lot of people lost a lot of money. So now, just yesterday, the SEC filed a lawsuit not against the creators of BitConnect, but against the people who were promoting it. To be clear, BitConnect has been sued in several class action lawsuits in the past by victims of the scam, but never by the SEC or some other major regulatory body. So the SEC has claimed that the platform ran an unregistered security offering and raised more than $2 billion, and they are now holding the people listed here as accountable for their promotion of the project, and they all profited by convincing investors to buy this unregistered security by using their followings on YouTube and other platforms. People have expected that something like this was going to happen, as the FBI actually sought out victims of the scam back in 2019 to learn more about it. We will of course have to see how this lawsuit plays out, which can always take a long time, but the fact that the lawsuit was brought forwards in the first place is very important. Why is this important? Because it could be the first major and very public step that the SEC and other regulatory bodies are going to be going after people who promote scams and other illegal types of projects. So I'm sure that there are many other people who profited by convincing their followers to buy BitConnect, as well as other projects they knew were too good to be true, and they are worried right now as this happened several years ago, which means that regulators are still looking at the 2017 ICOs and everything that has happened since then to catch people who broke the law. While this is definitely scary for anyone who did promote things like BitConnect for everyone else in crypto, this is great news because it could lead to a big reduction in the number of scams in the space, as well as increase its overall legitimacy, as right now there's a huge problem with people trying to scam crypto users, especially newcomers. All you have to do to see that that is the case is look in the comments section on a crypto YouTube video or the replies on Twitter, and you will almost certainly see a variety of bot replies saying to text a WhatsApp number or help them invest in some other way to buy a specific project to make huge profits. So another widely common type of scam is rug pulls, and these we see in DeFi all the time. I think it will probably take longer for regulators to get to something like that, but the good news is that every transaction on the blockchain is there forever. So when the time comes, the evidence will still be around. Another reason that this is a good thing is because we will likely start to see some clarifications in what can be considered an unregistered security versus what is just a token, as the lines between the two have never been very clear for some projects. So that is of course going to be helpful for both investors like ourselves as well as for projects as they shape the use cases and tokenomics of their native tokens in the future. I will definitely be paying attention to this case as it develops to see if there are any important disclosures or precedents being set. So if you want to stay up to date with everything like that, then make sure to subscribe as well and follow me on Twitter. Also, if you're interested in the actual details of the lawsuit itself, then those are available in several places, such as the SEC website or here in this article on the blog, so you can check it out if you wish to. I hope that you enjoyed this video. If you did, let me know down in the comment section. I will see you in the next one.